Hey, everybody. It's Lisa Copeland. Happy Tuesday. Well, I wanted to jump on today because I was on a call earlier with my good friend Grant Cardone, and he brought up something that I decided to take a little bit farther and do some research on. And I want to tell everybody out there, okay, so like we're hearing all this stuff, right? Our country's going into a recession, interest rates are too high, the market's going to crash. Okay, I want to give you some facts, okay? Some real facts. And then I want to encourage you to go out and do your own research. Okay, fun fact number one, the market's not crashing. Nothing about this market's crashing. Now, I'm here in Central Texas. That would be Round Rock, Austin, Pflugerville, Belton, Salado, you know, Central Texas, right? And our market there is some market correction going on, but I'm going to tell y'all right now, it's not crashing. And here is the fact that absolutely spawned me to do this Facebook Live today. And of course, if those of you who follow me know that I've got a whole team that does, like when I do these, then they go and then they chop them all up and they make them little 1-minute ditties. And so they're always telling me, Lisa, you got to do more of these. You got to do more of these. This call with Grant today, I absolutely about lost my mind. And I lost my mind because I'm like, okay, guys and gals, now I'm talking to Texans out there right now, okay? Because I didn't do the research in 49 other states, but here's the research in Texas. In 2021, according to the National Association of Realtors, there's my dog. According to the National Association of Realtors, 28%, 28% of all properties purchased in 2021 were purchased by investors, okay? That is double the national average. The national average is only 11%. So what's going on in Texas? Okay, I'm going to tell you what's going on in Texas. Everybody in America knows that Texas is the hottest state in the union, in the nation, maybe even in the world to live in, right? You have no state income tax. We came through the pandemic pretty well, not to get into politics, but it's a red state. I mean, we have done a good job on managing what is going on from a business standpoint. So investors know that when you can bring your business, move your business into a state where you don't have state income tax, number one. Number two, where a property prices are still affordable. Okay. And so why did Elon Musk come here? Why did he relocate here? Why have a lot of these big tech companies relocated here? For just everything that I've already told you. So all of these investors know that this is the place to buy property. They know it's the place to buy property. Because why? Because when you're an investor, okay, so I deal with a lot of investors. I do. I deal with a lot of people from out of state that are referred to me that have big 1031 exchanges, meaning that they've sold properties in other places. They've put it into a 1031 exchange and they've got to reinvest that money in like properties, investment properties. Hello, Melissa Munch, investment properties so that they can avoid paying capital gains tax. All right. And what they've decided to do when they've sold off these properties in California, North Dakota, Ohio, I can go on and on. Washington State, you know where they're moving their money, their assets, their investments to? The great state of Texas. Now, why do I tell you guys and gals all this? Because I'm making plenty of money off of investors for sure. Okay. I'm telling you this because on the same side, I've got clients saying to me, well, I'm not sure if right now I should buy a house. I'm like, okay, what would be the alternative to buying a house? Well, I think I'm going to rent. I just laugh. I just laugh. I think I'm going to rent until the market cools down or until interest rates go down. And I'm like, okay, hold on. Let me understand what you're saying to me here. You would rather rent and pay 100% interest, right? Because that's what you're paying when you rent a house. The interest rate is 100%. Period. There's just no getting around it. And that'll be one of the 28% of the houses that was sold in 2021 in Texas by some smart investor who said, I'm going to pull the money out of my state, out of the investment in my state, and I'm going to buy a house in the great state of Texas because rents are on the rise. So it's a good investment for me. It's a good investment for me to pay 5, 6, 7, 8% interest. And let me tell you, because investment rates are higher. They're higher than a homestead rate, okay? But see, they all see the fact that paying an interest rate of 6%, 7%, 8% is still a great investment. They don't care. Why? Because somebody else is paying their mortgage, right? Y'all think about that. So if you're out there right now and you're on the fence and you're like, well, I don't think I want to buy a house right now because interest rates are at 6%. Oh, okay. So are you going to go pay the mortgage of somebody else? I mean, and after the tax write-offs after you write off the interest and the taxes, your effective interest rate's about 3.75. I did the math on it today. And again, I'm not a CPA. I'm not perfect. Like what I did was just a bunch of averages, average tax bracket, average this, average that. But I'm like, after you write off the interest, your effective rate is between, so I don't get in trouble out there, 3.75 and 4%. Who cares? But see, 28% of the homes that were purchased in 2021, which is double the national average, by the way, double the national average, were purchased by investors in Texas. And why are they investors? Because they like passive income, because they know that they could take their money, all right, put it into an appreciating asset like real estate, and it would cash flow every single month. All right, think about that. So if you're out there and you're like, oh, I just don't know. I just don't think I'm going to buy real estate right now. I'm going to continue to rent. You're going to be renting from one of these people who feels like the best investment for their money, regardless of what the interest rate is. It doesn't matter what the interest rate is. My good friend Melissa Munch is on here. She's a mortgage banker. She can throw out some interest rates right now. Who cares? Who cares if their interest rates are 10%? You still have an appreciating asset on the other side. And will the appreciation be 40%? I hope not. Even for my own real estate investments, I don't want it to be like that because that absolutely kills the market for people to come into it. Are we seeing a little bit of correction right now? Absolutely. Of course we're seeing correction right now. That's okay. Market hasn't stopped. Market hasn't stopped. And guess what's going to happen now? Now that we've seen some price correction, mark my words, in 2022, that number put out by NAR, National Association of Realtors, at 28%, that 28% of properties purchased in Texas in 2021 were purchased by LLCs, investment groups, hedge funds, whatever, okay? That number is going to go to 50%. You know why? Because during times like this, people get scared. They run scared and they retract. I'm scared. I'm not going to buy a property right now. I don't want to pay too much for the house. I don't want to pay 6% interest. La, 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 la. And you're letting all that stuff that you hear on the news, you're letting it all run through your head. Guys, gals, turn off the news, okay? They're trying to keep you broke. The media is trying to keep you broke. The government is trying to keep you broke, okay? Without even elaborating on any of that, I don't need to. You know what I'm talking about. Those of you who know me, okay? They're trying to keep you broke. If the investors and the hedge funds think that buying property in Texas, okay, is the best and safest investment for their money, regardless of the price of the house, because hey, they bought those houses in 2021 when the prices were severely inflated. They didn't care. They threw their money in. Were interest rates a little bit better then? Yeah, sure. Who cares? But they paid a lot more for the house. Okay. An interest rate can always be refinanced. You can always refinance a rate. I'm going to tell you all this story. So you guys and gals know I have a mortgage company also. My husband runs it, does a great job. I had the opportunity to come back to my own company. And instead I got a real estate license because mortgages is a tough business. I've got the most massive amount of respect for my good friend Melissa Munch, who's on here, for my husband, for everybody that I've got so many friends in the mortgage business. Okay. But it's a tough business. But just know this, if you can get into a house now at the right price, okay, at a corrected price, more of a market price, and if the rate's 6 or 7%, who cares? Because when I was in the mortgage business, this is what I started to say. When was 9/11? It was, of course, 9/11/01. Yeah, because it was my son's. God, I'm losing it. Yeah, because it was my son's 10th birthday. Okay, and interest rates were about 7% prior to going into 9/11. And thank you, Melissa, 2001. I was so busy. I was so busy in the mortgage business. Now, this is before 9/11 hits. At 7%, 8%, 6.5%, who cares? They were bouncing around. Texas was taking off. I was financing houses like crazy. I had so much business. Then 9/11 hits. And I'm like, oh my God. Okay, the world's now coming to an end. Our country's under attack. We're never going to do another loan. So what did the feds do? Chop, 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 all the way to the floor, somewhere around 2.5%, I think. So now all of a sudden, one nightmare, a tragedy, whatever, takes us from 6 or 7, 7 or 8. I don't even know. Some of my mortgage people here jump in what rates were before 9/11, but they were a lot. They're about where they're sitting at now. And then we started refinancing houses. Okay. And then, and then we had a hard time getting back on our feet, and then, I can just go on and on about cycles and trends. Okay. Cycles and trends, who the administration is in office, that matters. Okay. It does matter. All of that. Okay. All of that. So we had a very, very healthy business in 2001 prior to 9/11. After 9/11, the whole world started refinancing. I am of the firm belief that coming into an election, either midterm or a 4-year election, all of a sudden the Fed's going to start cutting rates again. They are. It's going to happen. Or something else is going to happen, right? We're going to have the monkeypox kick up or whatever. Like there's going to be something out there that the Feds go, oh crap, we got to start chopping rates again. Chop, 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 chop. Okay. And just so you know, so the Fed rate, the prime rate is, just because they raise it 3/4 of a point does not mean the mortgage rates go up 3/4 of a point, right? Mortgage rates are backed by mortgage-backed securities, whereas the Fed rate is, of course, prime rate. Does it affect the market? Absolutely. Does the market price in some of that change on the mortgage-backed securities? Absolutely. But it is not a point-by-point raise of interest rates. Okay, so there's that. But every single person that I financed prior to 9/11, they just picked up the phone. Hey, Lise, can you refinance my house now at 3%, at 3.5%, 4%? Whatever. Like they were bouncing all around like a bouncing ball, right? So who cares what the rate is, guys? It isn't terminal. When you buy a house, you're locking in the price of the house, right? So even if rates fall, it isn't like, oh, you get to renegotiate the price of your house. But what you do get to renegotiate is your interest rate. Okay. So are we going to let these investors, see, I'm fired up now. Are we going to let these investors from out of state come into Texas and take advantage of all the equity that is sitting out there right now to be had, of all the houses that are sitting out there to be had? Now, I've got 4 listings left. 3 of the 4 would make amazing investment properties. Why are they amazing? We can buy them at a good price right now, fair price. They cash flow. I've done the numbers, meaning we can get more rent for them than what the mortgage payment is, right? So the difference between that and that is called cash flow, money in your pocket. They've got a great chance, upside appreciation, because they're in very desirable neighborhoods. So what's going to happen here in the next 4 weeks? I'm going to start getting a bunch of 1031 calls again, because I have a team all over the country. I've got guys in California. You guys know that. I've got 880 agents. I've got them in Texas, California, Florida, Kalamazoo, Mexico, Canada. They're everywhere. And if someone's coming to Central Texas, I get the referral. Okay. That being said, I'm going to get all these guys to start calling me, and they're going to be like, hey, I've got this guy who has a 1031 exchange. He's out in California. He's not going to invest in his own state. Hell no. He's coming to Texas with his money. And guess what? They're not going to ask me what the interest rate is, even if they have to finance it. They don't care. The rate is irrelevant. And I keep seeing these posts, and I keep seeing the news. Like, forget the news. They are so dead to me. It's not even funny. These people, they don't have a 3rd grade education when it comes to real estate. They just don't. They don't understand real estate, upside, appreciation, what you should do with your money. They all think that the money should go to the bank and make nothing. Cash is trash, right? That's what my friend Grant says. Guys and gals, if you can just break even on a house right now, okay, versus letting that money sit in the bank or rent, because that's what these 28%, I'm pointing, because I got this, look at this, guys. I got this piece of paper right here. So I just keep pointing to it because I'm so fired up about it. That helps. It doesn't help when I move my screen. Okay. So anyways, so are we going to let these guys come in to Texas? And that number is going to be 50% in 2022. I know it. Prices are starting to decrease. Any of you that follow Zillow or Realtor.com, there have been some adjustments in the market. Okay. And guess what these investors are going to do? They're going to come in and buy all these houses. Why aren't we buying all these houses? Why aren't every one of you buying these houses? Of the 4 I've got, 3 of them are phenomenal investments. If you call me on them, I will show you pen and paper what the mortgage payment is, what the taxes are, and what the rent is, because rents are going up. Rents are skyrocketing. See, that's another way that they're manipulating it right now. They're building fear. They're building fear. And so what's happening is these investors are lining their pockets. They're coming in and they're buying these houses in bulk. Okay. And they're almost 3 times the national average at 28% versus 11%. Okay. They're buying these houses in bulk. They're buying whole streets of houses. Up in Dallas, the numbers are ridiculous. Google everything I'm telling you guys. I mean, they're in there just swiping up whole neighborhoods in Dallas. Okay. And why are they doing that? Because they know something you don't know. Either that, or you know it and you just don't believe it. But they're buying these houses so that somebody else can make the mortgage payment, because rents are going up. Rents are going up because why? Because sales are kind of flattening out, right? And with sales flattening up, like, people have to have somewhere to live. So in their minds, they're like, oh, I think I'll just rent a place. If I just rent a house, I don't have to pay 6% interest, and oh, blah blah. And oh my God. And like, it's a race. Prices are going to go down, guys. Prices aren't going to go down that much, so forget about it. Okay, these houses are worth what they're worth. And that's just like the last thing that you have to worry about right now. But we have some inventory, which is a good thing, on the ground. We've got some selection. Interest rates are 6, I don't know, 6.5, 5.5. Who cares? Your effective rate after your tax write-off is about 2 points lower ish. Okay. Let's see. Oh, Melissa Munch says, yeah, rates went to 2.25. I remember James refinanced our house at, like, but we did it at 15 years and it was like under 2%. It was ridiculous. Okay. But guess what? That under 2% interest rate didn't change my life, right? When the house was sitting at 6%, that didn't change my life. But what will change your life, and I've told y'all this story before, and I don't normally share any of my financial stuff, but I'll tell you, I made so much money on my house, the last one I just sold. I paid cash for this one that I'm living in, that I built up here in Belton by the lake. Paid cash. I wrote a check for it and put more money in the bank. Okay, so right, equity's real. What if I'd have been What if I would have been renting for 9 years? I'd still be renting today, right? The only way to build wealth in this country, y'all, is real estate. You got to get in the game. You have to get in the game. I don't care what the interest rate is. 6, 7, 8, 9, 10, double digit that sucker. Who cares? Because the appreciation in Texas on average will be 15%. So if you take all the money that's sitting in your bank account right now, in your savings account, and it's probably earning, I don't know, 1%, maybe 2% if you're lucky, if you're in a wealth management account, okay, right? And you say, you know what, I'm going to put all that money and I'm going to put it down on a house or a duplex or a triplex or a fourplex, or I'm going to do something in real estate, right? I'm going to do something in real estate with that money. Oh, but the interest rate is 6 or 8%. What do I do? What do I do? You just do it. Okay. And you don't even have to live in it if you don't want to. Rent it out to someone else. Rents are at an all-time high right now. There's apartment complexes here in Austin, Texas, that are raising the rent $1,200 a month. Why? Supply, demand. Okay. The demand is there. Not enough supply right now because people are running scared of buying houses. Why were houses just so high during the pandemic? Why did that whole craziness start? Supply, demand. That's just the law of economics, right? When you have more supply than demand, right? Prices go down. When you have more demand than supply, prices go up. Okay. I didn't even go to school for economics, right? This is just like real estate 101. So, what are y'all doing out there? What are you doing? Again, I've got 3 properties right now that I could show you on a spreadsheet that they cash flow every single month. And if you took every dime that you had in the bank, not out of your operating accounts, but out of your savings account, and you put down the down payment on those houses, okay? And if in 3 years from now you wanted to sell them, you would make 15% on average compound on those houses. Then you have a fantastic tax write-off. You can write off everything you do to those houses. You can depreciate the roof. You can write off every time you drive to the house. Like, I can go on and on about the value of having investment properties. So if you're sitting on the fence out there right now, and I hope some of my friends are sharing this out, share it out, because whether you do it with me or with somebody else or with somebody on my team, like I hope you do it with me or someone on my team, but even if you don't, you're working with your own realtor right now. Like, who cares about the interest rate? Throw that out the window. It doesn't matter. Something's going to happen in the next couple of years, and you're going to be able to refinance it. We're going to have a midterm election. We're going to have a presidential election. Something's going to happen. The monkeypox are going to come. I mean, whatever, right? Something's going to happen, and you're going to have the opportunity, because the feds are going to run scared and they're going to start chopping the rates, right? But right now is this moment in time where you can pick up some properties. We have some supply. We've got some houses on the ground right now, and there's some good deals from the new home builders. Okay, whatever it is that you want to do out there, but don't sit on the sidelines. Do not sit on the sidelines. I made my son buy a house about 3 months ago. They were going to just rent a house, and I'm like, no, not on my watch. The only way that you will build wealth is in real estate. And the most money I've ever made on anything, transaction at a time, has been in real estate. If it wasn't for real estate, I'd still be an apartment dweller, right? And so, and just the same with so many of you. So anyways, I've got 3 properties. I know most of my agents have 3 to 5 properties right now that we could show you on a spreadsheet. Even if you did not want to live in them, you should buy them. You should buy them. Somebody else is going to pay the rent. Somebody else is going to pay your mortgage payment. Someone else is going to pay the taxes. You're going to get all the tax benefits. You're going to get the write-offs. And then in 5 years, when you call me and you want to sell it, you've made $200,000. Then I'm going to show you how to take that $200,000, put it into a 1031 exchange, reinvest that money, and keep rolling that ball down the field. Okay. My good friend, Rebecca Contreras, I just did a bunch of deals for her. And, and her mindset was, when we sold the one house, she was just going to buy, we were going to sell one, put it in the 1031 exchange, and she was only going to buy one more house. She ended up buying 2 duplexes and a piece of dirt, big piece of dirt, 17 acres that she's going to build their family ranch on, right? Because I showed her what was possible. And number 2, how to beat the tax man. Like, I don't want to pay my money to the government. I don't want to. I want every single way to not have to pay legal. Probably get audited after this. Oh my God. Legal way not to pay taxes. And then I'll leave you with this one. Here's another cool thing about investment property. Do you know that you can leverage it? So once you get to the point where you've got some equity in it, you can leverage part of that equity. You can take that money out tax free. That's just a whole nother webinar on that. Whole nother Zoom on how to leverage your investment properties, pull cash money, tax free, and somebody else pays for it. You'll have to come back and listen to me next time. I'll actually give you the lesson on that one. But that's what the big boys and girls are doing. So let's not let it be where 28% of the properties sold in Texas in 2021 were bought by investors, almost triple the national average of 11%. Right? That would have been 33% would be triple. So we're like at 2.5%, 2.5 times. Why? Because the whole world knows that Texas is the place to own property. This is the greatest state in the country. And don't be getting any Texas haters on here, because I will block you and delete you for sure. But that being said, I got 3 of them right now. If you live in Central Texas, I can show you. If you're ready to go all in and you're ready to, number 1, believe me, I can show you the stats. I can show you the numbers. 1,000,000%. You will have your money in a safe investment. You will cash flow, and you're building future generational wealth in real estate. So reach out to me, Lisa, at lisacopeland.com. And I'll be back again soon, because my guys are telling me I need to be filming a lot more of this stuff. All right, everybody take care. Bye, y'all.